The capital markets are the markets in which long-term investments greater than 1 year are done. In capital markets, both equity and debt instruments like equity shares, preference shares, and debentures are traded. Both individual as well as various institutions can participate in buying and selling of various securities. The functioning of capital markets is almost similar to the money market. It provides a link between the investors, or we can say it provides a link between the buyers and the lenders. These are some of the problems that are faced by investors in the Indian capital market. First one is price manipulation. So it is very common practice that prices of shares of companies that are proposing to come out with a public issue are artificially pushed up in the market. Then there is oversubscription of shares. Usually when the companies make public issues, and they are oversubscribed many times, a large number of investors lose interest in the money locked with the company. Then there is a lack of transparency, which is another shortcoming of the capital market. The investor does not know the actual rate of return. So the investor should be informed in advance about the rate and brokerage of transaction. Then there is investors grievance issues. So thousands of complaints are received from the investors against the companies and brokers. The complaints includes regarding the refund orders, then the letters of allotment, dividends, and brokerage, and some other issues. Then next comes the inadequate disclosure. Availability of complete and correct information is required for developing an investor protection program. So some companies give false and misleading statements in their prospectus so that they can attract and cheat some innocent investors. Then there is insider trading issues, in which a person from within the organization leaks some sensitive data which will impact the working of organization in future. Then there is problem in case of takeovers and mergers, the settlement of funds, and as there is a variation of prices of shares of two or more companies which are merged. So this creates a lot of issues in the capital markets when two different companies with different prices of shares merge together. Then there is problems related to settlement mechanism. The grievance settlement machinery is not working properly. The grievance related to transactions, then payments are not settled quickly as required by the investors. So these problems are hampering the functioning of the Indian capital market. In order to overcome the problems faced by the investors, the Securities and Exchange Board of India, that is SEBI, was established in 1988, which got the legal status in 1992. The main or fundamental objective of SEBI was to protect the interest of the investors in the capital market. So the main functions of SEBI is related to regulate the business of the stock market and other securities market. It promotes the awareness among investors about the safety during the investing in the capital markets. So it also prevents the unfair trade practices like insider trading. So it also regulates the acquisition of shares and takeover of companies. So following are some of the measures which are taken by the SEBI to protect the investors and to regulate the capital market. The first one is establishment of credit rating agencies. So the credit rating agencies like CRISIL, which was established in 1988, then is ICRA, which was established in 1991, and other agency which was CARE was set up in order to assess the financial health of different financial institutions and agencies which are related to the stock market activities. So it is a guide for investors for evaluating the risk of their investments. Then second is increasing of merchant banking activities. Many Indian and foreign commercial banks have set up the merchant banking divisions in the last few years, and these divisions provide financial services such as underwriting facilities, issue organizing and consultancy services. So it has proved as an helping hand to the investors who want to invest in the capital market. Then it helps in electronic transactions. So due to technological development in the last few years, the physical transaction with more paperwork has been reduced. Now paperless transactions take place. It saves money, energy, and time of the investors. Thus, it has made investing safer and hassle-free, which encourage more and more people to invest in the capital market. The next measure was growth of mutual fund industry. So the growing of mutual funds in India has certainly helped the capital markets to grow. Public sector banks, the financial institutions, or the foreign banks in India and foreign countries have launched many new funds. A big diversification in terms of schemes maturity has taken place in mutual funds in India. So this has given a wide choice of securities or a wide choice of investment opportunities for the investors in the capital market. Then SEBI also enables the proper functioning of various stock exchanges like BSE, NSE within the country. Then is investors protection. So under this, the SEBI has set up an investors education and protection fund in 2001. It works in educating and guiding the investors, and it also tries to protect the interest of small investors from various frauds and malpractices which occur in the capital markets. The growth of derivative transactions has given a variety for the investment, leading to the expansion of the capital market. Then there are reforms in the insurance sector. The Insurance Regulatory and Development Authority, that is IRDA, was set up in 2000. It paved the way of private players into insurance sector in India. Then is commodity trading. So along with trading of ordinary securities, the trading of commodities is also encouraged by the SEBI. The multi-commodity exchange, that is MCS, is set up for promoting the commodity trading. So apart from these major reforms, the setting up of Clearing Corporation of India Limited, the venture funds have resulted into the tremendous growth of Indian capital markets.